minutes, please. Can you tell us how digital platform or smart innovations have enhanced trust and transparency in real estate transaction in Africa from your own perspective? Thank you, my brother.
Yes, thank you very much for having me in this webinar. This is a very, very important webinar for Africans and African entrepreneurs, especially the ones who are coming up, and it's a great pleasure to be here. Now, to your question, how innovation in technology has helped Kenyan in Kenya. There are several areas that I could highlight, even though I will not be able to highlight everything. One of the major areas that we can talk about in Kenya, where information technology and innovation has helped buttress the development on real estate and also enhanced innovation in both construction and investments, is when it comes to management of tenants, and also management of the processes that are involved in investing. You notice the presenter, Mr. Chetty, talked a lot about the innovation in construction. And that was aimed at addressing the question of affordable housing, which is actually a very big topic in Kenya today. Our government has invested a lot in infrastructure and also in construction. And where technology, information technology has helped a lot is the question of management of tenants using mobile-enabled payment systems. And also that has helped a lot with access to credit. You notice Kenya is one of the countries where access to banking is limited, and with the introduction of fintech, individuals or transactions that would previously not have been considered by your credit institution or your financial institution, that will go into enabling an investor to leverage what is available through their transactions. That has changed the game and actually introduced a large pool of young investors into the real estate game. A few years back, for someone to actually enter into investing in Kenya through financing, you probably had to be 40 years plus to build up a good credit name with your financial institutions, and probably have a business that is running with fintech, with information technology, and with all the innovations that we are talking about today. Access to credit has been enhanced to a point where actually I have worked with clients who have had access to credit from banking institutions without having the need for collateral, which was previously not possible. So technology and innovation has increased access to credit, which is a prime mover in building, is a prime mover in creating portfolios, and also is a prime mover in enabling goods. Finally, I would also mention that information technology, financial fintechs, and also green energy technology has also enabled a new brand of investor conscious generation that is looking towards a longer period that is very useful when you think in terms of investment. Like today I was working with investors who are creating plans and blueprints that they are going to deploy for the next 25 years for a real estate investment development that will be technology smart. And when you are presented with a space that is not short term. When we talk about business and investments, you don't want to be restricted to 3 years. You don't want to be restricted to 5 years. Yes, you want to think in terms of 25 years, 50 years, and that's when the capital outlay, that's when the cost of money, cost of funding, and that's when the cost of everybody that is involved in the development makes a lot of sense. And I think that has helped in terms of thinking innovatively, not just in terms of green roofs and greenhouses, but also in terms of sustainability and the return on investment that can come from real estate and from real estate investment. So I think with those 4 points, I think I can yield back to Engineer Yunusa to continue with moderation.
Well, so now the question is that to you now, I seen from your track record, even our personal discussion, you have been in this game for over 20 years. You have seen the good, the bad, and the ugly. Now, based on your own experience, considering innovative and sustainable investment, how do you think that developers or stakeholders or investors, however, can raise finance for project development in Africa? What are the strategies can you highlight for such kind of person? Thank you.
Thank you once again, Yunusa. Yes, I have been fortunate to be active in this industry over the last 22 plus years, and I have seen, yes, all the aspects of the Kenyan real estate, especially. And I've also been fortunate, to consult in the neighboring countries, so I can compare and contrast some of the salient features that are there. But coming to the question of finance and the overall idea we are discussing about today, which is innovation and leveraging innovation, I would tell you for sure that capital is not lacking. I can tell you that for sure. Probably early in my career, I would have said, we don't have capital, money is not available to do real estate. What we have is we have a huge population, of course, which is young. They do not have access to capital themselves. But capital as a factor of production operates in such a way that you don't necessarily have to have it in order to use it. All you need to do innovatively is to create a structure that allows to that capital. And I have seen, I was, in my other response to the question that you had asked, I had mentioned that, earlier before the webinar, I was working with my clients. Most of my work involves around the question of portfolio architecture. Essentially, you have investors who want, to de-risk their investments from certain property classes that, are deemed more risky than others. There are others who want to do long-term investment strategies, and they need a structure that can deliver that. Probably they want to access capital without having to go to the bank. That is possible. We have structured that many times. But the point is that you have an opportunity when you are dealing with real estate. Real estate is a collateralized asset. That means it has a title deed or a lease. And of course, the stories that I'm hearing from you and the others about Nigeria and other parts of Africa where, you're possibly of getting, defrauded. It's pretty common in many parts in Africa. But aside from that, collateral offers you access to capital. If you can structure the investment in a way that guarantees the owner of the capital his security to begin with. If I'm going to give you $1 million, for instance, to invest in real estate, how have you structured the development? Are we going in, jointly as a joint venture? Are you asking me for money? I just hand it off to you. Is it going to be a corporation where I could have shareholding? That is innovation outside of technology. I have worked with clients who have been willing to get into projects and seed off probably up to even 60% of the project, profits, project cash flows, as long as there is someone who is willing to bring in the capital that is required to make the project successful. And when we are talking about sustainability, I think one of the things that is capital sequencing, where if you are an investor and you are projecting the next 25 years, that is one generation down the line, and you're starting with a small amount of capital, you can set up a structure whereby you're going to sequence your project in such a way that after your fifth project, for instance, you may not now need to go back either to the bank or either to, hard money lenders. Yes, hard money lenders are an innovative way of financing development, but not in income generation, probably in development, for sale or for other kinds of things. Yes, access to capital is a challenge where innovation has not been considered. One of the possible ways that I usually help my clients when we are structuring their portfolio is diversification. For instance, if an investor, let's say Emmanuel is an investor and is beginning to want to develop his retirement portfolio or post-legacy portfolio and has a challenge of capital, innovatively, he could, start off by building the capital instead of starting off by building a building that will give him income. He can sequence his processes in a process that deliver the capital required. Let's say he needs dollars at the end of the time that is required. He could, or $1 million at the end of the time that he needs to have his investments. He could start off, with $10,000, but instead of having that held in a small income generation property, it could go into a capital multiplier project and they are there in all the countries. The capital multiplier projects are there in all the countries. And within the first probably 2-3 years, he would have his capital move from $10,000 to probably $100,000. In which case now he can switch his model to income generating property, cash flowing properties, which would in turn also enable him access mortgages from the rent that he's receiving from the buildings that are generating cash flows. Yeah. So if I go to your question right, B capital is available, but the question is, are you is your if you foolproof your project with before I finish, there's something else that I want to add that, and I've seen it work in Kenya a lot, and oftentimes investors overlook it, and it is something to do with quality and delivery of products, investments, developments, or whatever it is that you're going into. In Kenya, we have had situations where a lot of builders in the real estate industry try to do shortcuts and end up having, buildings that are not quality, that are not good, and thereby lose, customers, or use clients, or even lose tenants. I have seen situations where when the developer, or when the client is able to deliver quality services, quality products, they are able to actually get a structured format where they can actually get capital from other investors who are not willing to do the bulk of the work. I think just like you are describing, the investor who wants to come to Nigeria, he understands how real estate investing works, but probably he doesn't want to do the running up and around. So he needs somebody on the ground to do the actual frameworks. Capital is available.
Thank you very much. I love the confidence in you saying capital is available. Capital is available. And you said something that resonates with me. You said you you don't need to have a capital to use it. You said you don't need to have it before you use it. And you said access to capital is a challenge in a place where innovation is not considered. Then you said quality also follow capital. You deliver a quality product, capital will follow you. So thank you very much for that, for that insight. It means this discussion, the next one, you are coming on board again, because there's a lot of questions that are sparking on my brain to keep asking you, and because of time, I know today I will not be able to. So now, thank you very much for that one. In summary, how do you think we can leverage innovation and sustainable investment to unlock the African real estate market?
Thank you. To your question, I want to give your audience three, I will call them advanced tactics that they can take with, so as to take advantage of the opportunities that are there between now and, of course, 2050. Because yes, indeed, I'm an insider. I can tell you the opportunities are there. The population of Africa is growing higher than anywhere else. And most of the time, I work with elite investors. I work with people who have been investing for probably 20, 30 years in real estate, and they are seasoned and they understand the market, and they don't just believe in the market. They know it's probably the last investment vehicle that would be threatened on on the planet, on all the economies. Use technology, data-driven tools. Don't be everywhere. I have worked with clients who have used this methodology and decided either to go to high income neighborhoods and do their developments there, and do one house at a time, or go to low income, which is very big in Nairobi, and do massive and mass numbers. And I can tell you, for instance, one client does one project in high income areas and makes a profit of $500,000 in one property. That would be wonderful for somebody who is looking forward to the future. The second tactic: find creative ways to raise capital. Again, I've been fortunate. I've been teaching real estate investment and for many years, and one thing that always strikes those who are new to the industry is how versatile the instruments are. The title deed, the lease, the mortgage, they are versatile if you understand how to use them. So if you find creative means of finding capital, because usually capital is usually the greatest challenge in investing in real estate. If you use what I said earlier, good quality, you do good work, you establish a system that works, that is bankable, you will be able to raise capital. Today we have, again, information technology, fintechs, and you have possibilities of raising capital from pooled resources, and being able to deploy it into real estate. And finally, the third tactic that I think most people don't think about. I've seen this most of the time with very, very elite investors, people who are playing, their games beyond the $1 million numbers. And the tactic is think long term. Even when you are a young investor, think 20 years, think 30 years, think 40 years, think in terms of investments that will outlive you. That way, a lot of challenges that usually come to investors will just get obliterated, by the way. For example, I was working with a client the other day, and when we were doing their portfolio architecture some years back, the objective was to have 10,000 units. You don't think about 10,000 units in a 2-year plan, in a 5-year plan. You think about 10,000 units, apartment number 1 up to apartment 9,999. Then you drop another one for the 10,000. So those are quite a number of apartments. So you can only consolidate such an idea when you are thinking long term, when you're thinking 25 years, when you're thinking 30 years. You remove yourself from the equation a little bit, so that most challenges that are usually emotional, and we just sometimes make them up in our minds, they get out of the way, and now you sit down and craft a very solid structure that you're going to use as an investor going forward, and approach real estate as a very solid, it's a very solid investment vehicle for the future. All the Africans that will be in Africa in the next 10, 20, 30 years will need a place, will need a roof over their head. They will need a school, they will need a church, they will need an entertainment joint, they will need an office. All that, if you are strategic and smart, all those will be your customers in the future. I yield back to Engineer Yunus.
Thank you very much. In fact, the three takeaways, you say we should use data-driven tools, find creative way to raise capital, and think long term. What advice will be given to an investor who wants to invest in real estate? Any panel can volunteer to answer.
I had written a note on that question. Anyone thinking of investing in real estate, they are thinking in the right direction. It has not been my experience where I have found, buildings or properties that are not being asked for. People are not interested in putting them into use. Any real estate development you're going to develop, someone will be interested in doing something with it. I'll ask the person who was asked the question just to do a quick analysis between the available investment vehicles. You have real estate, you have government bonds, T-bills, and so forth. You have shares. Shares will go up, come down sometimes. Real estate, most of the time when it goes up, it stays there. It doesn't come down. And now you have commodities. I would place, Bitcoin and the rest, and currencies in the band for commodities. Just do your own calculation. Look at what gives you an opportunity to preserve your wealth beyond generations, and also return on investment, and which one gives you the opportunity for leverage to use other people's money not within your control. Real estate gives you that beyond any other asset portfolio. Thank you.